when you open your MT4 or when you open your account at any time and you have trade running, you should be able to understand everything that is going on in your account, which is what we want to cover on today's video, known as Forex Accounting Simplified. All right, so it's very simple. And talking about Forex Accounting Simplified, we're going to be talking about things like what is your account balance, because anytime you open your MT4, like this. Let me show you. You should be able to easily know these things. Let's just go to MT4. So anytime you open your MT4 and you see trades running like this, you can see trade running, you can see some trade, even though the market is actually closed now, but on my MT4 you can see some trade running. So on my screen there are a lot of things on my screen, like you have the balance here, you have the equity, you have the margin, you have the free margin, you have the margin level, you have floating capital, and all these things. You have to be able to understand these things. If not, your ignorance can actually cause you to blow your accounts at some point in time. So let me explain that to you. So on today's video, that's what we're going to be covering. On today's video, we'll explain what is the meaning of account balance. We'll explain what is floating profit. So what do you understand by unrealized profit or floating profit? That is what we'll also cover. And then we'll cover what is margin. They'll say, okay, I don't have enough margin, or maybe I had a margin call, or I had a margin breakout or margin level. So we'll talk about margin, and under margin we'll talk about what is used margin, what is used margin, what is free margin, what is a margin level. We'll also talk about what is a margin level. We'll talk about what is a stop out level, because if you don't know how to trade and you deposit money into your account and you blow it out, there will be a point where your broker will actually close out your trade. When they actually see that your account is going to zero and you can even owe the broker. There used to be a situation where people used to owe brokers. People will trade regularly and they will even blow out their entire account and even blow out the broker's money. So because of that, they have what they call stop out level. The level where if the broker see that your money is finished, they will automatically close your trade, which is known as the stop out level. We'll also explain what is meant by margin call. Actually having a call from your broker to advise you to close your trade and go home because you don't know what you're doing. So it's called margin call. We'll also explain what is known as equity. So what is equity in trading? So with that being said, let's go to what is known as account balance. As simple as it is, anytime you deposit funds into your trading account, anytime you have cash into your trading account, it represents your account balance. All right, so that is your account balance. If you're able to deposit $200 into a trading account, then that is equal to your account balance or the cash. You can either call it the account balance or the cash. You can see they say the total funds deposited into your trading accounts available for trading. This is very, very important. Total funds are deposited into your trading account which are available for trading. So that is known as your account balance. Total amount deposited into your trading account which is available for trading. So now let's talk about what is floating. What do you understand by floating profit or loss? You can see it's either floating profit / loss. Floating profit / loss. Because anytime you place a trade, there are two outcomes that can come out. Before you place a trade, there are two outcomes. And after you have placed that trade, there are still two outcomes. When you're placing a trade, the two outcomes are you're either buying or selling, right? There's no other way. In Forex trading or general trading, you're either buying or selling. Now, when you've placed the trade, the next thing you can also do is, or the next outcome, the next thing that can happen is either you make a profit or you make a loss. As simple as that. And when it comes to floating profit or unrealized profit, floating or unrealized profit just measures the total amount, the total floating amount. If you're making a gain, if you place a trade and you're making a gain, then that gain will represent your floating profit. If you place a trade and you're making a loss, that loss you're making will represent your floating loss. It is called floating because at that point you have not closed the trade. That is why it is still called floating. That is the main reason it is called an unrealized profit or floating profit, because you haven't closed the trade. The trade are still open or the positions are still open. Take this MT4 screenshot for an example. On this MT4 screenshot, you can see I have trade here. These are positions. I have all these trades open, and according to this trade, I'm actually making a loss of $268. All right. So this loss of $268 represent my unrealized or my floating loss. So you see, so this one will represent my unrealized or my floating loss, because it is still floating. It might still turn from a loser to a winner. It might actually, even if it is a winner, it can actually still turn from a winner to a loser. So that is why they call it unrealized or floating, because the fate of the trade is not yet known, or the outcome of the trade is not yet known. So they don't know whether it's going to end up as a profit or as a loss. That is why it is called an unrealized profit or an unrealized loss. All right. So that is just what you have to understand when it comes to unrealized profit or floating capital. But let's go down to what we call a margin. Margin is very, very simple. With the explanation of margin, let's just assume you have $1,000, right? If you have $1,000 and your broker is offering you a leverage, let's just say a leverage of 1:500, right? Let's just assume your broker is offering you a leverage of 1:500, and you have a 1,000. You deposited $1,000 into your trading account. And then your margin, your total margin or your available margin, your margin will be your account balance multiplied by the leverage. So the margin will be equal to, let's just assume you deposited $1,000, right? So the margin will be 1,000 times the leverage. Account balance times the leverage. The leverage is 1:500. So you multiply this by 500. So your margin will be equal to 500,000. 500,000. All right. So that is your margin. So you'll be trading like somebody who is having a $500,000 account. So that is your margin. To determine the margin, so a margin is just the amount of money required to be deposited into your trading account to cover for open positions in the forex market. As simple as that. So it is just the amount of capital which is required by you to deposit into your trading account, who should be able to cover your open position. Before you open any positions, you need to be able to have a balance. You need to be able to have a margin which should cover that particular position. And to calculate that margin, you just multiply what you've deposited into your account times the leverage which your broker is offering you. If your broker is offering a leverage of 1:10, then you just multiply that by 10. But in most cases, most brokers will offer you a leverage of 1:500. So you multiply that 1,000 you deposited times 500, and your margin is 500,000. Now let's go to what is free margin. Let's say since you've deposited $1,000 into your account and you have a margin now of $500,000 because of leverage, you now place a trade. Right? Let's just assume you use a standard lot. A standard lot is just you use one lot size. And with one lot size, we already explained on. You see how all these videos are linked. We already explained on our previous videos that for you to be able to place one lot size, you need 100,000 units. All right, you need 100,000 units of the base currency for you to be able to use one lot size. You need 100 units of the base currency. So let's just assume because of that our $100 account, which we have a margin of $500,000, we place one standard lot. If we place one standard lot, let's just say on Euro USD, it means we've already used 100,000 units, because 100,000 units is required. That is what they call the required margin. All right, the initial or required margin. So the required margin for that trade is 100,000 units. So if you subtract this 100,000 will stand for this 100,000 will stand for the used. The 100,000, this one will stand for what we call used margin. All right. So 100,000, this one will stand for used margin, because this is the margin we've already used out of 500,000. All right. Good. So now, since we've already used 100,000 out of that 500,000, what is free margin? You can see here we have free margin. So what is free margin? As explained. So free margin will just be your available margin minus the used margin. As simple as that. So your available margin, which was your account balance times the leverage, you multiply your account balance times the leverage, and it was 500,000. You've placed a trade of a standard lot, and to place a trade of a standard lot, you needed 100 units of the base currency. So if you subtract this 100,000 unit from 500,000, what is left? So your free margin will be equal to 500,000 minus 100,000. All right, so your free margin will be equal to 400,000. So that is your free margin. So with this, so if you want to place any other trade, that is the margin. That is the margin which is available. That is the unused margin which is still available to cover your other trade, because $100, 100 unit of the base currency is already used for the one lot trade. All right. Now we've already spoken about what is free margin, what is a margin level. What is a margin level? If you also check on your MT5, you see on the screen there's something they call margin level. As soon as you are already placing the trade, and you are using this one was minus 100. As soon as you are already placing the trade and you are using part of your margin, your broker or the system automatically calculate the percentage left. The percentage of the margin left, and it is called the margin level. All right. What is a margin level? So a margin level is just the percentage. It's just a percentage of the margin left after placing your trade. As soon as you've placed your trade, the margin which is left is calculated in terms of percentage. So you see sometimes margin level you see maybe 82%, or margin level sometimes you see maybe 200%. So you margin level is just the available margin. It's just the available margin which you can still trade. You can still place trade with after subtracting the unused, or after subtracting the margin for the open positions. All right. So that is what they call free margin. So let me clean all of this. Good. So after explaining what is free margin, what is a stop out level? Good. Just like I explained, in olden days where the system was not yet automated, or when the system was not automated and you could easily, there were instances where your broker will actually take a phone. If you are trading regularly, and let's just say your broker is giving you a stop out level. A stop out level is just an underlying level, or just a determined level which your broker put to say, okay, if you don't know how to trade, or if you place a trade that is burning out your account, if this percentage of your margin is used, then the system should automatically close your positions. You understand? So they're just saying if this percentage of your account balance is used and you are still in a loss, then the system should automatically close your trade. That is what is known as stop out level. For most brokers, the stop out level is equal to 50%. So if the stop out level is 50% and you deposit $1,000, you deposit $1,000 into your trading account and you place just one trade. All right, you place just one trade. If you place that one trade and you are already down, with minus $400. If you are already down with minus $400, it means you've already lost 40%, right? If you're already down with $400, it means you've already lost 40% of your account. So at that point, your margin level will be 60%. Since you've already lost 40% of your account, at that point your margin level will be 60%. Let's just say you keep on trading, you don't know what you're doing, and you lost again another $100, and now you are down with minus $500. At that minus $500, it means you've actually lost 50%. It means you've actually lost 50% of your account. And if the stop out level from your broker is 50%, if now from this point onward, if you lost again even just $2, if you lost just $2 at this point in time, where this particular stop, where this your available margin goes down by just 48%, then the system automatically close your positions. All right, the system will just automatically close out your positions, because the brokers don't want a situation where your use margin should instead be finished, and there used to be a situation where people used to owe brokers. All right, so if you a stop out level is just a predetermined percentage of your available balance or of your margin, which if you reach at that particular level, then the system will automatically close you out. For most brokers, for IC market, for most big brokers, the stop out level is 50%, meaning once you've already blown out the 50% of your account, they'll automatically close you out. So if I have $1,000 and I blow 500, they'll close out. I'll still be having $500 in my account, and then I can place other trade again. So if I'm having $500 left and I place another trade and it goes against me again, 50% of that $500 mean after $250 has been wasted, they'll still close down my position. That's how people keep doing it continuously until at the end of the day they'll be having zero balance. All right. So you need to be able to understand these simple accounting terms, so that you can be able to keep yourself safe and you are able to read the data when you place your trade. You should be able to read the data on your screen. All right. And then what is margin call? A margin call, I've already explained margin call. Margin call is just a situation where your broker sees, if in a situation where brokers don't have stop out levels, they instead have what we call margin call. When you've already gone below 50%, what they do is they'll actually take a phone and call you and advise you that, hello, Mr. John, we've seen that your account is now on the negative. Can you add more capital into your trading account or close your current position? That's what they have to do. They want to do. I've actually had calls from many brokers sometime when I just started. They'll actually say, Mr. John, we found out that your account is actually going to the negative. Can you add more funds to be able to boost out your margin or close out your current position? So they do that. That is called margin call. So you actually receive a margin call from your brokers telling you that, sorry, you don't know what you are doing. It's better you should go and learn how to do carpentry than to be wasting your time on Forex. So that is what is called a margin call. So with that being said, we've already spoken about margin, we've spoken about use margin, margin level, stop out level, margin call, unused margin, and all of that. So now, what is equity? Equity is one of the best terms that I always like to use. All right, equity is one of the best terms that I always like to use. And just as the just simple, equity is your balance plus unrealized profit or loss. All right, let's just say we deposited $1,000 into our trading account. And at that day, or on that day, we place a trade and we are up with plus $50. Let's just say we're up with plus. Let's take the plus situation for the first example. Let's just say we deposit $100 and the first day we are up with plus $100. All right, with plus $100. Yeah, let's just say we're up with plus $100. Good. So since what am I doing? Okay, good. So let's just say we're up with plus $100. All right. So we deposited $1,000 into our trading account, and we placed our first trade, and we are up with plus $100. Then on your trading account, on your MT5, you see something on your MT5 on the screen. You see where it says equity. That equity, the way the data measures, what the data is measuring, or what equity is measuring, is your current account balance. So your current account balance plus, you can see here, plus your unrealized or floating. You can either say unrealized or floating. Unrealized or floating profit. So in this situation, what is going to be our equity? Let's just see. So since equity is balance plus unrealized profit or loss, since we've already placed the trade and we are up with $100, what is going to be our equity? So our equity simple will just be $1,000, which is our balance. Our balance is $1,000 plus unrealized profit is what? Another $100. All right, so our equity here will be equal to $1,100. That is our equity. As simple as that. That is how you are able to calculate your equity when it comes to Forex trading. If you have open position, this is very simple. This is very, you should take this. If you have any open position, your equity will be your balance plus any unrealized profit. And even in this case, let's just assume you were instead losing, and you place your trade and you were instead down with minus $100. All right, So what will be our equity? Our equity will just be now $1,000 minus, remember it says plus unrealized profit or loss. Our unrealized profit now is what? Minus 100. So our equity will now be $900. So that will be our equity, which is our current balance plus or minus our unrealized profit. And if you don't have any open position, your equity is just equal to your account balance. As simple as that. If you don't have any open position, your equity is just equal to your account balance when you don't have any open position. But so long as you have any open position, you either add or subtract the floating or the unrealized profit on your account balance to have your equity. So that's how you calculate your equity. All right. So now let's take this MT5 example. Now we have our MT5, the same example which I explained to you guys earlier. Let's be able to deduce. I've been able to explain most of these things to you guys. So let's see if we can deduce most of those things from this screenshot. All right. So the first thing we have here is our balance. All right. Let me see. The first thing we have here is our balance, and our balance here is what? $10,620. So it represents the amount I deposited. That was the definition of balance, right? So the first one here, you have balance. So balance, if you check here, our balance is $10,600, which is what I deposited into my account. So balance, as explained earlier, is just the amount or the capital you've deposited into your account or into your broker, which is available for trading. So I deposited $10,000. That is why my balance is $10,000. Equity, I explained equity. Equity is your balance plus or minus your unrealized profit. What is my unrealized profit? I explained earlier that the unrealized profit or the unrealized profit or loss is what is actually floating here. Because you can see, I placed a couple of trades. These are the trades I placed. And by this point, I'm actually losing $268. So this $268 stand for my floating or unrealized profit. All right. So this is my floating because it's still fluctuating. It's still way up and down. The fate of this trade is not yet known because I haven't closed it yet. It's still open. So that is why it is called the floating or the unrealized profit. This $268. And now, if I add this $268 to my balance, it will give me the equity. All right. And since it is negative, if I subtract $268 from $10,620, I'll have $10,351. So that is why my equity here is $10,000. My equity here is $10,351 because they have subtracted my unrealized profit from my available balance to give my equity. And then margin just stands for margin. This same margin just stands for what I'm using for this trade. So for all the trades that are open, the margin is what I'm placing, what is holding those positions. So it's like a collateral. So the collateral that is actually holding all this open position is actually 1,000 out of 10,600. The margin that is needed for this trade, like the required margin for this trade, you can see there are small trades 0.01, 0.02. So they are small trade. So the margin that is needed for all this trade is $1,100. Good. So this $1,100 stands for what? It stands for what? The used margin. All right. So this one stands for the use margin. And since this 1,160 stands for the use margin, our free margin, I already explained. Free margin is just your total margin minus the used margin, right? Our total margin was 10,000, even without putting the leverage. Our total margin was the same as the account balance without putting the leverage, which was 10,620. But margin, we've already used 1,000 or 1,160 is needed, must be available for us to have these positions open. So that is what that's why the definition of margin, they say definition of margin is the amount of money which must be deposited as a collateral to hold your open positions. So the margin needed to hold all these open positions is 1,100, which is also known as the used margin. I've already used that margin. Now the available margin is now my total margin minus the used margin, which my available margin here is 9,180. And then my margin level, remember I explained that the margin level stands for the percentage. The margin level is measured in terms of percentage of the used margin in your account. I have a total of $10,600, and I've used just 1,100 and this as the required margin for this trade. So my margin level is still very high. So it's calculated in terms of percentage. Coupled with the leverage in my account, I still have the margin level about 892% because of the high leverage that I also have on my account. So those are the simple terms when it comes to Forex accounting. As simple as that. Next time when you open your MT4 and you see margin, you see free margin, you see required margin, you see equity, you see unrealized profit mode, you should be able to understand those terms. All right? You should be able to, there's no way you can skip a step in Forex. There is just no shortcut in Forex that you say, okay, I'm just going to skip the basics and just go and start making money. No. At this level, these are not even the basics. We are already talking about the accounting in Forex trading. So these are not even the basics anymore. There is no way you can skip these steps. So I hope you've taken down your notes. I hope you've taken all the points I've pointed out on today's video. If you open your MT5 tomorrow and you see most of these terms, I hope you'll be able to use it in your trading. You'll be able to calculate them. You'll be able to even call your broker and say, no, I discovered that my free margin was this, but it shifted to this. Why was there manipulation? So you will be talking now like a professional. You'll be talking like somebody who knows what he's saying. So this is very important, and I hope you've gained some knowledge from today's video. If you do gain some knowledge, or if you did gain some knowledge from today's video, please leave a thumb up on the video. Leave a thumb up on the video, and if you are watching and you haven't subscribed, please hit the subscribe button below to subscribe to the channel so that you can always be informed once I come up with content like this. And if you also want a broker that will be able to simplify most of these things, you want a Forex broker to use, check a link on the description below so that you can also use the same Forex broker I use. Until then, if you want to join a community of Forex trader, there's a link on the description below where you can join a Telegram group, a group of Forex traders that discuss ideas on a daily basis. So till then, leave a thumb up on the video, leave a comment on the video, subscribe on the channel, and I'll see you guys on another live video. Peace.